All right, I considered fixing my hair, but I think it'll just be funnier if if we just do it like this. All right, guys, welcome to Hunter FX, the most woke trading channel on YouTube. Here today, we're going to do a tier list of the best indicators and the worst indicators. Now, if it was up to me, you guys know it already. All the indicators would be shit. There's some that are better than others, and there's some that I can actually make you a little bit of profit. Some can actually help you understand some things a little bit here. So let's do a fun, quick video of the tier list of the different indicators that you could be using as a Forex trader. This is specifically Forex trading. Let's dive into them. What we've done is we've loaded up 10 indicators, and you're probably wondering what the hell are these. They're just some pretty little images that I found on the internet, and I wonder if you can figure them out before I actually tell you what they are. So what we're going to do is we're going to go one by one, and we're going to see where things all lie out. Let's start off with the simple one here, moving averages. I've just put it on Adobe Spark here, something like this. It's a little bit easier for us here to manage. Moving average, guys, moving average, if we look at the chart here, looking at the moving averages on the chart here, you can see using a moving average as some sort of trend continuation, so a trend bias, figuring out the bias of what the trend is going to be pretty good with a moving average. It's going to tell you on the higher time frame, okay, if we're above the moving average, it might be a good time to be looking for buys on the lower time frame, but when it's going sideways, it's really choppy, so it doesn't always work. So we're going to put the moving average as a rough C tier, starting off right around in the middle, where it's got a use, but it's not all that useful. So let's look at the next one. Let's just look at volume. Obviously, you guys know the volume of a square. We can use volume to determine how much pressure is going into a level. If there's a lot of volume breaking out of a level, it might be useful in determining that it actually is a true breakout. We can also use volume as the volume profile as well, so we can see what range has the most volume, what levels are creating the most volume rather, and then also we can use volume on this side to say, hey, you know, there's a lot of volume here, so most likely this is going to actually be breaking out when we are breaking this level. So I think we can put volume as a bit more useful than a moving average, and we'll put it at maybe a B, I think, because this way, the volume is actually quite helpful in seeing how much pressure is in the market, but it's not good at trading itself. It can't give you any entries. It can't tell you the bias. It can't do anything other than tell you how many people are trading at that time. All right, jumping to another random one here, guys. If you are familiar with this image, it says MACD. So if you guys remember from long ago in the streams, I had drawn out MACD, and if you are a veteran in the channel here, then you will recognize this, and I don't remember what day I drew it there, but it's way back on the live streams here. So I think MACD is a really crappy indicator. Let's type in MACD here. It is a very lagging indicator. It doesn't really add too much confluence, and the only thing that you can really use it for is divergences. So we're going to drop the MACD all the way down to a E tier because it can be used in divergences, but it's not very good at all. It's kind of the crappy little brother of indicators that always fucks things up for you. So we've added the RSI here, a relative strength index. Obviously you can tell here, guys, the relative strength index, it is a much better indicator in terms of divergences. It will actually make you some money if you are new. And let's type in RSI here, and let's just see some divergence here. A divergence happening right here. Yeah, so you can see it increasing, but this is decreasing, and then there's a reversal. So it doesn't give you any targets, it doesn't give you any stop losses, but it can tell you roughly when the trend is going to be changing, and we don't know to how much degree or anything like that. So it's a really great indicator when it does come to indicators, right? So we're actually going to place this guy, I think, all the way up at the A tier here. He's going to be a really strong competitor. He's going to be one of the best indicators. He's very easy to use, and he can make you money just using it. Pretty much that and the candlesticks and the price action. Moving on, let's look at This is an airplane. It is an ATR, average true range. It is a type of airplane as well. So the ATR simply is used for how far your stops are maybe going to be placed. It's for the true range. How wide is the usual price being moved around? So a higher ATR is you could say that this is the average amount of pips that the price moves. So right around here, we're getting a much wider range of the volatility. So we're going to be wanting a wider stop here. That's all the ATR is pretty much used for, is where you're going to be putting your stop. And sometimes people use arbitrary stop, not arbitrary stop, but kind of a random stop placement based off of the ATR. So that's not based off price action, so that it's not obvious where your stops are, so the market makers can't really hunt you. So ATR, it's okay in a aiding sense, but you don't need it in any sense. It can help you if you want to put a random stop. It's a very rare situation, so we're gonna put this in a lower class. We're gonna put this right around I think a D tier here, an ATR. And it's just not very useful, but some people might be able to find use in it. Moving on here, guys, we have another one. This guy is the king. This guy is required by everyone, and it can be used alone, right? This one, if you trade price action alone, you can be very, very profitable. And this is what I specifically do. So obviously I'm going to be biased, but it is required with every trading strategy. So this is why this is the ultimate S tier. There is no question about it. This guy will blow everything out of the water, and it's required no matter what. Looking at something more candle related, let's look at candlestick patterns. This is just specific patterns, hammers, the triple white knights or whatever, the dojis, things like this. This is going to go hand in hand with basically a moving average, right? Because that's exactly what we used a moving average for. It's just going to be trend following. It's going to be useful in the higher time frame, but not very useful in the rest of the trading. Next one, it is Parabolic SAR. Parabolic SAR, it's another stop out indicator. So, if you were to get into a long here, you would just move your stop along, and then once it got to your SAR there, then you'd stop out here, right? So it is a good tool for knowing if you're not very good at placing your stop, and if you want a trailing stop, then it could be useful for you, but it is not very useful on its own. It doesn't give you targets. It doesn't give you entries. So this is another one where it's going to be actually a lower tier. And I'm going to put it at, with MACD here, it's going to be quite useless. Fibonacci, guys, this is a good one. You guys have seen me use Fibonacci. Let's just draw a Fibonacci out here. It's going to be used for retracements. You can come back down to this kind of golden area and look for trend changes around that area. So it's going to be a great area indicator to look for entries. It does not give you the entry in itself, though. Even though it is useful, it's going to be something that we're going to have to use with something else. So we're actually going to put it at a tier because it is one of the best ones. I would say it's on par with RSR. Getting close to the end here, Bollinger Bands. Bollinger Bands, guys, let's look at it. Let's clear this up again. Let's go Bollinger. Bollinger Bands really just kind of shows you where things could be bouncing, getting to extremes. I've tested a lot. It doesn't do anything. Really, guys, this is a crappy one. I think some of this theory is after it comes back in the range, but it can still keep coming back out. And I've tested multiple different theories, and it never seems to be consistent with anything. So it might be useful in conjunction with other things, but it's safe to say that this is one of the worst indicators that you can have in the top indicators. Moving on, last one here, guys, the Ichimoku cloud. Of course, the only thing that's named after a cloud. So Ichimoku cloud is a good trend following system, right? Its idea is that it's very confusing, is the first idea. Is that 80% of profit is taken within the trend. So as long as you're just trading that trend and you're using the crossovers, it is essentially a moving average. Very complicated. There's a little bit more to it. I've used it out for a bit. It's not good in Forex. I'll tell you that now. It is only good in trending markets like the NASDAQ and the Bitcoin and things like this. And again, you can just be using something else instead, such as a moving average or simply price action. So the Ichimoku cloud, it can be useful in trend following situations, but it's not something that we want to be actually using. So it's probably low down on the D tier here, actually, guys. Right, taking a look there, guys. Hopefully you remember what everything is there. That is, I think, that is a great final final sum up, I would essentially, if you could use just one, it would be the S tier here, the price action. If you wanted to use two, I would say, you know, match up some things with price action. 2 or 3, Fibonacci, price action, maybe the candlestick patterns, volume. These are the kings here. They can all really go hand in hand there if you are a good trader. If you're just a beginner, maybe RSI, moving average, might be a good thing to combine together because those are nice and easy to kind of just look at the lines if you're a beginner. But I would say as an advanced trader, these are kind of the ones that you really want to do. And these guys down here, these are so worthless. Nobody should ever use these pretty much. But if you are a kind of a wonky type guy, you might be able to make a strategy that works along with those. All right, guys, if you like that content, if you like the tier list, let me know some other tier list suggestions in the comment section below. We can do this again because that's kind of a fun video. I rather like it. If you guys want to be a part of a Signal group or education or anything, link in the description. There's also a free Discord in there as well. Follow me on Instagram. See you guys next time.
Listen.